What's up, fellow investors? I'm Matt. In this video, I'm going to walk through my stock analysis of the aerospace and defense company Northrop Grumman, ticker symbol NOC. On this channel, it's my goal to log my journey to financial freedom and show how I'm doing this through disciplined saving and smart investing. Let's find out if Northrop Grumman is a good investment after the intro. Northrop Grumman is a defense contractor that's involved in a ton of different industrial and engineering projects for the different military branches and NASA. And this has been a company that's been a really strong performer over the last 10 years. In fact, from 2012 to 2018, Northrop Grumman went from about $50 a share to $350 a share, which is about a 600% gain. And even though the stock has been consolidating between this $275 and $375 range, if we look at Northrop Grumman's performance from 2012 to now, it has still significantly outperformed the S&P, or the general market. If we shift to talk about Northrop Grumman's revenue, it reports on 4 different revenue segments. The first segment is going to be its aeronautic systems. This is going to be where Northrop Grumman designs and builds autonomous and manned aircrafts for the different military branches. Its second segment is going to be its defense systems. This is going to be where it designs and builds missiles and anti-missile / anti-artillery defense systems for the different military branches as well. Its third reportable segment is going to be its mission systems. This is responsible for installing a lot of the technology, software, and sensors that are going to be used on aircrafts, land vehicles, and ships. And its last reportable segment is going to be its space system segment. This is where Northrop Grumman helps design, build, and even transport satellites into space. Northrop Grumman is also involved in a ton of projects with NASA, like NASA's Project Artemis, which is supposed to return us to the moon by the year 2024, and supposedly a lot of the technology that we're using to land on the moon then is supposed to be able to help us when we eventually try to land on Mars sometime in the future. If we look at a pie chart of Northrop Grumman's revenue, we can see that its largest segment is its aeronautic system segment, which did $12.1 billion of revenue, which is about 32% of its total revenue. Its smallest segment is going to be its defense system segment, which is about $7.5 billion, coming in at about 19% of its total revenue. But Northrop Grumman is pretty evenly split across these 4 segments, and its space systems at $8.7 billion in revenue is definitely the newest segment and one of the faster growing ones in Northrop Grumman's portfolio. And if we look at this slide, this is Northrop Grumman's net revenue growth from 2015 to 2020. In 2015, Northrop Grumman's net revenue was $23.5 billion, and now in 2020, it was about $36.8 billion. And as you can see, from 2018 to 2020, it's really started to grow pretty fast with 16, 12, and 9% growth respectively in those 3 years. And this is because in 2018, Northrop Grumman acquired a company called Orbital ATK. Orbital ATK is a company that's involved in building rocket ships that are mainly used to supply cargo to the International Space System and also to transport satellites out into space. This acquisition really cemented Northrop Grumman's place as a player in the upcoming space industry that's going to have very good growth over the next decade or maybe even 2. And if we look at Northrop Grumman's space systems revenue from 2018 to now, it's grown from $5.8 to $8.7 billion. So this is one of the fastest segments that Northrop Grumman is growing right now. This transition has also resulted in a decrease in Northrop Grumman's gross margins, but this is to be expected because this is a new industry and it's not going to be as profitable as its other segments as soon as it gets in. So this is really more of a long-term outlook because it's going to help Northrop Grumman grow over the next decade and be more profitable in the long term rather than right now. Next, I wanted to look at Northrop Grumman's net income, and as you can see, from 2015 to 2020, it's been doing a really good job of growing its net income, as it's grown from $1.9 billion in 2015, and now it's $3.1 billion in 2020. But unfortunately, especially over the last 3 years, there's been a lot of noise in Northrop Grumman's net income, and this has to do with some of the non-cash expenses that it books against that. And one of these is the MTM expense. This MTM expense is related to the money that Northrop Grumman is expected to pay out through its pension program. So basically what that line is doing is it's taking the change in value of the cash flows that Northrop Grumman is expected to pay out over the next 20 to 25 years. So it's going to be valued similar to a bond. As interest rates go down, the value of those payments is going to go up. And since this is an expense, because Northrop Grumman is not collecting the payments, it's paying out the payments through its pension program, it's going to be negative. So this is why we see a decrease in that line item from 2018, 2019, and 2020, because interest rates have dropped pretty significantly over that period. So that's also why that has had such a significant impact on the net income that Northrop Grumman is reporting. Now, because of the volatility there, I thought it would be a better idea to look at Northrop Grumman's free cash flow from over this time period to get a better idea of how Northrop Grumman has been growing. And from 2015 to 2020, Northrop Grumman has been growing its free cash flow by a compounded rate of 11%. So it's been doing very well over this time period. Now, another metric that a lot of the aerospace and defense companies report on is their backlog. Backlog is a measure of the orders that the company has received but hasn't yet fulfilled. So it serves as a really good metric for seeing how well the company is going to grow in the future, because if the company's backlog is growing, especially while its revenue is growing, this is really good for showing signs that the company has very sustainable growth going forward. And Northrop Grumman this last year posted a very impressive backlog, because comparing its backlog from 2019 to 2020, the space systems backlog grew from $16.1 billion to $35 billion. Now let's also remember that the revenue for this segment is currently only around $8 billion. So this shows really good signs that that segment is going to have a very good future in front of it, and that it's going to be very good for Northrop Grumman to continue to put resources and invest in resources to grow that segment. I also wanted to bring up a note, because this has come up in the news recently, but this actually happened last year, where Northrop Grumman lost a contract where it had to cancel its Omega rocket ship. I think that this is just a speed bump in the road, and especially if you look at the backlog that it posted in this last 2020 annual report, I think that Northrop Grumman is going to be fine and continue to find areas to grow in this industry in the future. So it looks like the management team at Northrop Grumman has been doing a very good job at managing the business over the last 6 years. It has very strong free cash flows, and it's been growing pretty consistently over the past 6 years. And it also looks like the company is doing a good job at positioning itself to continue to grow this cash flow and returns that it's going to give investors in the future by its exposure to the space industry. The next thing that I think we should look at is going to be Northrop Grumman's balance sheet, because we want to get a good handle on its assets, liabilities, and equity that it's been reporting on for the last year and prior years. So starting with the assets and liabilities section of Northrop Grumman's balance sheet, if we look at Northrop Grumman's total current assets and total current liabilities, it's got about $15.3 billion in current assets and $9.5 billion in current liabilities. So it's very well capitalized for any short-term obligations, and there's really nothing to worry about. But if I look at its total current assets, it grew from $10.6 billion to $15.3 billion. And this is mainly due because it increased its cash position from $2.2 billion to $4.9 billion. And it's also holding assets for sale, which is about $1.6 billion. This really makes sense to me because the company has a really big backlog when it comes to its space systems segment. And I suspect that the company is doing basically everything it can to put cash into that segment to continue to grow it. Now, if we go down to its total liabilities section, it looks like the company also took out some more debt, where it increased its total debt from $12.7 to $14.2 billion. It also had some other debt in its other current liabilities when I dug further into its SEC filing, but it only has a debt to assets of about 37.3%, which isn't too bad, especially for a contractor, because a lot of its revenue is going to be pretty consistent over the next coming years. And looking at its total assets of $44.4 billion versus its total liabilities of $33.89 billion, I think this really helps complete the story for me that The company is in a good spot to be able to reinvest capital into its business and its space systems segment to continue to grow in the future. And if we continue down the balance sheet and look at Northrop Grumman's equity, it grew its equity from $8.7 billion to $10.48 billion from 2019 to 2020 because it's using that money to reinvest in the business. Now let's also see how Northrop Grumman has been doing at returning capital to its shareholders through dividends and stock buybacks over the last 10 years. This is a slide that shows NOC's dividend growth and stock buybacks from 2011 to 2020. So in 2011, Northrop Grumman's dividend was just $2 a share, and now in 2020, it's almost tripled to $5.80 a share. So it had some really good years of consistently growing its dividend by at least 10%. So from 2011 to 2020, this comes out to a compounded annual growth rate of its dividend of 11%, which is very impressive. And now if we look at NOC's stock buybacks from 2011 to 2020, as you can see from 2011 to 2016, NOC was putting a lot of capital back to work in buying back shares for investors. In 2011, it bought back 14.4% of its outstanding shares, and it was doing 7 to 10% basically from 2012 to 2015, and then in 2016 it dropped to 4.1%. This is because from 2017 to 2020, as we know, the company has been using more capital to reinvest and grow the business. So with NOC's current stock price at $322 a share, its dividend yield is about 1.8%, which is low, but it has a very strong history of growing that. And as you can see, from 2011 to 2020, its dividend tripled over that time period. And, going back to the beginning of this video, its share price also increased by 600%. So it's been a very shareholder-friendly stock. And its payout ratio is also very reasonable at about 30%. So next, I wanted to show this chart because it really highlights that Northrop Grumman is trading pretty cheaply compared to the rest of the market. On the top, we have Northrop Grumman's price, and as you can see, it's been consolidating basically from 2018 to 2021. It hasn't really moved a lot, but during this time, NOC has still been doing a good job of growing its earnings and its cash flows. So I have its price to forward earnings at the bottom, and right now it's trading at a price to forward earnings of about 13.3. This was at the beginning of the year, so I think its price to forward earnings is around 14 right now, but still very, very cheap compared to the rest of the market. And if you look at how the company grew from 2014 to 2018, not only where we might be in a situation again where the company is trading cheaply, but if it has really good growth behind it, this stock could really do well over the next 10 years. For the sake of transparency, I wanted to share my positions in Northrop Grumman. It's a stock that I've liked for a long time, and I made my first purchase in the beginning of 2017. I purchased those first 9 shares for about $240 a share, and that position has done really well. And even with this, 30% pullback that NOC has had, that position is still up about 34%. And now that I see that Northrop Grumman is still lagging the general market, and I still see that it has these tailwinds and good prospects for growth in the future, when I saw it hit about $300 a share in October last year, I was really excited to add more NOC at that valuation because that's, like I was just saying, that's like a forward PE of 13, 14. So that's what really attracted me to make another investment into this company. I've been reinvesting the dividends as well. So really just from my 2017 purchase, I've acquired about 3.7 additional shares at an average cost basis of $317. It's really great to reinvest dividends in a good company like this because I have a lot of confidence that the stock and the business is going to continue to do well in the future. So overall, my gain is just at about 16%, but that's been coming down. The percentage has been coming down because I'm starting to invest more into the company. So I pulled up this chart of NOC on TradingView to do a quick technical analysis. The stock has really not moved much over the last 3 years, which can be frustrating for any investor. But The stock is definitely not in a downtrend. It's really just consolidating. And as I was saying earlier in the video, these periods of consolidation are good because it allows the market basically to digest its current evaluation. And if it consolidates long enough, its valuation starts to get cheap enough to where it could serve as a catalyst to start a new uptrend. And that's kind of what I think is going to happen with NOC. It's had a really volatile 2020. I mean, this volatility is really frustrating for any investor, especially when you're looking at the rest of the market, go on to new highs and do really well. So if you hold on to this stock, it's really easy for investors to get impatient, but I think patience is going to pay off with Northrop Grumman. Its company is really good, and I think it's starting to really see some good prospects for growth in the future. So its valuation is cheap, and I think it's very possible that it could have some nice multiple expansion going forward. Oftentimes, after these really volatile, kind of like frustrating years with stocks, that's when the company starts to enter into an uptrend. And so if NOC, pulls back to its moving averages or continues to consolidate in this range, I'm really happy to pick up NOC kind of at this price range because its valuation, especially when compared to the rest of the market, is very appealing. I hope you enjoyed my analysis of Northrop Grumman. If you made it this far in the video, don't forget to give me a like and subscribe down below. And if you're a dividend investor, another video you might be interested in is my video on Allstate. Allstate recently raised its dividend by 50%, and it's also trading really cheaply to the rest of the market. I think that's also a stock that has good growth prospects in the future. So I hope everybody has a good Easter weekend, and best of luck investing going forward.